Good evening everyone and welcome to Heichi system practice. This is our second webinar for our Heichi system, and today we will see some new tricks that you can use to actually trade this system possibly in counter trend direction. So for all of you who like Heichi system, this is a small add-on to our existing trading system, and it will give you actually the opportunity to trade this system also in counter trend environment. So before we begin, as standard, our standard is disclaimer that explains that online education materials are developed by Admiral Markets Estonia for a global audience. So take into consideration that the information in this session is not suitable for everyone. Have in mind that this webinar is for informational and educational purposes only. The risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. And today's agenda will be about our Heiken Ashi. Okay, you already know the rules because I assume that you actually visited our previous two webinars. And here it is. This is the chart, and this is how it could look like. So once you apply Heichi template, guys, you need to check if you have corresponding indicators. So this is standard Heiken Ashi, this is modified CCI. Now, one thing that I would like to show you is how you can trade this system in counter trend environment. Very important here is to have when you're doing back testing, you need to have the indicator that gives you historical data, right? The data here is actually derived from my indicator Pivot 2 because it shows history. So if you want, you can also use Pivot 2 indicator, okay? And also you can add our indicator that I have already sent to you. If not, I can send you. It's actually our ATR indicator that is set on 14. Setting is 14. I will also show you that in a moment. So here our ATR custom indicator, and here when I go to ATR period, I say I just type 14, and here it is. Okay, so this is what we should see now. We can move this. Okay, you can move it actually wherever you want. Okay, so here you can see that we have our ATR indicator and our Pivot 2 indicator that is set on classic pivot points. So here indicators list, Pivot 2 indicator, and here classic pivot points show history is set on true. Okay, so here easy to see. See, it's true. So if you do this as I did, you will be able to see these lines when you flip your charts to the left. Okay, now why is that important? It's because you can see historical price action. You will also notice that these pivot points are actually corresponding also to Admiral Pivot points. You see, basically the calculation is roughly the same. So S1, S2, R1, R2, you see it actually corresponds to the indicator that I originally installed here. It's Admiral Pivots. So here you see that it's the current calculation is the same. So for back testing, you need to see the history. So here you can actually see the history also, but for all of you who don't have Admiral Pivot indicator, here you see this is you can say show lines all the way across chart here, but what I like to see is actually I like to also test it with this because it's roughly the same for classic pivot points, and Pivot 2 you can also ask from me. I will gladly send it to you. And well, you see it's actually red and green lines. when you look to the history, pivot point is always gray dotted line. Below pivot point is S1, S2, S3, and S4. Above pivot line, it's R1, R2, R3, and R4. Okay? So it's very, very, very important for you to see that in history, don't be confused when you flip your charts to watch the history. This dotted line, pivot dotted line, will always be gray, okay, gray dotted line, like now. Above it's resistance, below it's support. For ATR, you go to indicators list, press double click here, and ATR period, you need to set it on 14. 14 corresponds to the 14 days of price action. Okay, it's 14 days of price action, and it's always good to use it because this system is traded on intraday time frames. Okay, so because it's a intraday time frame trading system, this is how I set it up. So 14 ATR period here, easy to see, easy to install. Another thing that I wanted to mention is this. You probably know how to trade the system, and we already covered that in our two webinars. It was the original Heiken Ashi system, then Heiken Ashi Heichi system practice. In this webinar, we will cover how to trade Countertrend. So if you are new to this webinar, please refer to the original webinar that is called Heichi Heiken Ashi system and Heichi system practice, where I explain how to trade with trend. Okay, so this is now we are doing now a different method with Heichi. It's called Countertrend. So in order to trade Countertrend, first of all, ATR should be at least 80% full. Okay. Oh, Zaman is saying your system is awesome. He gained an enormous number of pips. Okay, thanks a lot. Thanks a lot, Zaman. Thanks a lot. Really, I'm very glad to hear that. Well, I mean, that's the point, right? To actually provide you with good tools that you can trade, and with a system that should not be hard to comprehend. Well, I'm very, very glad to hear that. So now this Countertrend trading rules only go to Countertrend if you actually are familiar with Countertrend concept. Okay, so don't now push into Countertrend if you don't know how to trade it, if you're not sure. Countertrend trading is a little bit specific. It's more specific than trend trading. So because of that, you need to have everything aligned. So you need to know when to place Countertrend trades, you need to have divergence, and you need to have your ATR. So the first rule is that ATR is 80% full. Now guys, we are watching 29 of November price action, and do not watch ATR now because this is current setting. So this is what we see currently on dollar Swissy. See, currently on dollar Swissy, we see 44.73. So we will not take that into consideration. Have in mind that the first condition is that ATR should be almost full. If the ATR is 80% or more, then we are looking for the price to touch either R2, R3, or R4. Once R2, R3, R4 is touched, you can search for Countertrend. The only exception is if, for example, R1, this is R1 here. If R1 is touched, but also ATR gives you 100% of ATR. If 100% of ATR has been achieved and the price is touching R1, then you can start searching for counter trend. So once these two rules have been met, you need to actually search for divergence, guys. Okay, you need to search for divergence. The first thing in uptrend, you need to go with higher high on the price and lower high on the CCI. CCI is oscillator. When you have a higher high and lower high, higher high, lower high, that is the sign of divergence. Your entry is after the divergence. So once Heiken Ashi starts to turn to red and it closes below this blue line, that's your entry. So guys, this is your entry. So see, price has been doing, it's a little bit rangy, but obviously it's a sort of uptrend from here, right? So here, this is your entry. Have in mind that targets are different for counter trend. Your first target is always next pivot point or support. So if your entry was here, your target was here. But it can happen, and it will happen for counter trend, that price does not exceed and it does not go below the cloud. In that case, guys, if you see that price does not want to break the cloud, in this example to the downside, you can take the profit in the cloud. Because the original rule says that if you want to go long, okay, if you want to go long, the price needs to be above the cloud, it needs to break the line, and CCI should be around 200, right? 100. It should be 100, it should be 200, it can be 300, but it needs to be sitting around 100 or touching 100. Now, because obviously when you're going counter trend, the price will not always break the cloud. Your first target is the cloud, and then you go with lower targets such as support and pivot points. In this example, we also see the confluence and we also see divergence, guys, but we don't have the entry until this point has been touched. You can also see a divergence here and here. So in order to actually go with divergence trading, it needs to happen in next 1 hour at least. So here you see now we had actually 1 hour passed, and here also 1 hour passed, and then we had an entry here. The best is always to try to take a trade when divergence and slightly after divergence has been shown, like next 3 or 4 candles. It's ideal. But sometimes, guys, 1 hour is 4 15-minute candles. So sometimes if it doesn't happen immediately, like here, guys, give some room. So for example, on our first entry here, we had divergence happening entry happening after 3 candles, and that was okay. But if it doesn't happen after 4 candles, then I mean, it's not the strict rule. You should definitely wait to see if we will have a break through this line. If we don't have, then you need to wait for another divergence to form. This is additional rule that I developed actually after previous webinar for divergence. So at this point, the rule is maximum 4 candles after the divergence has been confirmed. We should have an entry. But sometimes you need maybe to let 1 or 2 more candles to actually, it's like 6 candles, but it's only sometimes. At this point, I don't go above 6 candles. Ideally 4 candles, sometimes 6 candles. Here you can see divergence has been shown here, and actually it was okay here, The first, yeah, but you see, this is also important, guys. Once you see this bullish candle, it's also a possible retracement. And here, the third candle after this bullish retracement. If it had happened like 1, 3, 2, 3, 4, 5, 6 candles, we would have disqualified this trade. So it's very important to watch for divergence. Okay, for example, bullish divergence is when you have a lower low on the price and higher low on the oscillator. This is bullish divergence. And see here, guys, the candle that gave you the entry was exactly, it was the fourth candle. So this is divergence 1, 2, 3, fourth candle here. And you see, guys, the thing is that it might be in the cloud. It might be in the cloud. So if this happens, your next target is obviously this resistance here. Obviously that should be that, because you don't have enough room to trade if you get in a trade like here. So it needs to break this cloud, and here we go. So this is your entry, and here, see, it's been hit. Or if this was your level, it's been hit. So always watch for next targets. Always. This was your next target. If you want to go with trade management, do it as we already explained. If the price is breaking this resistance here, you just move your stop loss couple of pips below this resistance. And here you see next target has been hit. Okay, here. And after that the price retraced. So you can manage your trade however you want, because you are actually the master of your trade management. This is my recommendation. Move your stop loss couple of pips below resistance, and if the price really hits next resistance or next, you can take the whole profit. Shazad is saying that he cannot install the pivot. Okay, this is how you do. First copy your pivot 2 or ATR indicator. Then you go to file, open data folder, here MQL4 indicators, and you paste it here. When you paste the indicators here, you need to either close your platform, restart it, or right click here and left click refresh. That will install your indicators without closing the platform. Okay, so you don't need to close the whole platform. You just need to actually click here and refresh. It should work. I mean, this works. This is Admiral Markets, Supreme. So file, open data folder, MQL4 indicators, and paste here. Once you do that, you just refresh. Left click and refresh. Okay. You can always, by putting the indicator pivot 2 and selecting show history, you can always back test your divergence and trend entries. I encourage you to do that, because then you will get a better grasp of how to trade those counter trend moves, guys. Okay. Hidden divergence we don't use. We only use regular divergence, because regular divergence is about counter trend. Hidden divergence hints for the trend only. Now let's see some more historical examples. I mean, you need to do that in order to see how the system behaved with counter trend moves. You need to watch the history, and it's a good thing, because the CCI indicator is very easy to read, guys. Very, very easy to read. Okay. So for bullish divergence, you need to watch For lower low and higher low, and for bearish it's higher high and lower high. So let's see if we have more examples. We will scan now and see. Okay, let's see. We need to find some divergence here. Okay, so it's lower low here, guys. Divergence. See this? Okay, so this is a lower low, and here you have a higher low. Your entry was here, and see, guys, if this was your entry, okay, it happened 1, 2, 3, 4 candles. You see the entry. Your next target was here, 5 pips. So you need also to think, if you're in this trade and the price hit this resistance here, right? It went down, you are in a loss. It went up to your target, to your entry. Think, if the price wanted to go above this, it probably should have already gone above this. So if this happens, take your profit at break even, guys. Remember, counter trend entries are not that profitable as trend entries, because counter trend will usually appear during profit taking. So that is when big money is taking profit. So that is why you need to know that counter trend is not profitable as trend trading. Okay, you can always find good examples of this, and don't forget, ATR should be at least 80% and price should be touching R2, R3, R4. Okay, let's see if we have another example. Okay, for a bearish we need a higher low and lower high. So actually here, guys, I think we have divergence. Well, obviously here, let's see, this is R2, this is R2, and now we need to have a higher low here. Yeah, but we don't have a higher low, so this is not good. Although you see the price went deeply down, but we need to have actually divergence. So we need a higher, sorry guys, we need a lower high, no, higher low. This is, yeah, this is higher high. Now we need a lower high, lower high, lower high. Okay, let's see. So all these candles, yeah, here we have a divergence. Okay, here. And you see 1, 2, 3, 4 candles here. Your entry, I mean, when you're versed in trading, you could place even your entry when price is touching this, because it was obvious that it wanted to go down. You see here, next support was hit, it went down, so you would probably secure 15 pips of profit. Shazad is saying it's working now. Thank you. Okay, it works. Let me just, okay, here. So once more, guys, don't forget, really, I mean, if you have a good success with trading trend-based entries that the original system really is created for, then you might consider counter trend trading from time to time. Okay, from time to time. But because if you want to have more entries to trade, then definitely use divergence. Zaman is asking, can the divergence also be measured through MACD indicator? Yes, of course, but in this system, no. In this system, we only use CCI. It's very important to know that. So for this system, we are only using, exclusively we are using CCI, guys. Okay? We are not changing the rules. We only are adding to the rules. Okay, let's see if we have another divergence forming. Here, guys, higher high, the price touching and going above, definitely above R2. This is pivot, R1, R2, and here, I mean, when you see this, guys, this is almost a double top. Okay, so this is also divergence. So here, this is your entry, and watch this. It needs to go at least to the cloud. It went to the cloud, so it was like 10 possible pips you want to actually, and here you see it, 15 pips. But we actually are showing Euro Swiss. It does not have good ATR. We can actually show, let's see, Euro Yen, for example. Euro Yen is better. So now we are focusing on counter trend entries. Let's see. Also, guys, when you see that trend is very, very strong to the upside, okay, be careful. Here, divergence. But we don't have an entry. 1, 2, 3, 4. Okay, we don't have an entry. Do we have another divergence? Yes. Here. Another divergence. Here. Here. Entry. Let's see. Yeah, definitely divergence. This candle here. Yeah, this is divergence. This candle. So it looks like this. So you need always to match the candle to the corresponding oscillator. See here, so this candle and this oscillator here. Divergence. Here your entry was here. Okay, 1, 2, 3, 4 candles. Yeah, and if you see this, you need to go with, of course, red candles. 1, 2, 3, 4. Red candles. Fourth candle below the line. Your first profit is here. Price went down. Your second profit here. You see the price was breaking. Now you can see this when there is some news or something big is happening in the market. So you can actually try to really ride the move down to support or resistance line. So this is very, very, I mean, probably some news here, and watch this. Sometimes, guys, you will see a momentum push. But today, for example, 56, 128. So when are we going to look for counter trend move? The only way I would go with counter trend move is if Euro Yen makes 80% of its ATR, so 80% of 128, and when it gets, for example, at R2 here, or let's say because this is ranging, if it gets to this point, okay, here, R2, S2. So that is when I would be looking for entries. If you see that ATR is low compared to last 14 days of price action, you simply negate the possibility of trading. So here, guys, we don't see anything to trade. The price has been contained really within the range. Simply, I mean, it's logical because tomorrow we will have ECB. So Euro pairs are waiting for ECB, right? And definitely there will be movement in Euro. So guys, this was everything I prepared for you today. You can find a lot of historical examples also yourself. If you have any question that I need to answer, I will do it. Guys, I mean, this can be a good system if you know how to trade. Stick to, I mean, I'm still seeing very good comments about the system. So, yeah, so you definitely need to give it a chance. Shazar is saying, asking, can you please show again where to put on 14 days? Here, indicators list, go with calculator here, okay, here, and you just need to press here, 14, and it will be okay. Okay, so it's easy, very easy. If you want the indicators, just send me an email, Zaman. Send the email and I will send the indicators. Okay, so just send me an email and I will send the indicators. Here, for example, pound is qualified. It's 113 ATR, last 40 days 131. So it hit actually S2. So it qualifies for counter trend entry. For counter trend entry, you need to have a lower high. Here, guys, this was counter trend entry. It already happened on pound dollar. So this is a lower low here. You see here a lower low, and here higher low. But you see 1, 2, 3, yeah, no candles here. So we need to search for, okay, here we don't have counter trend. So this was counter trend, possible counter trend entry, but this filter, you see the filter is great. It simply filtered out possible bad trade, you see, because the price didn't break through this line. So if now we see a possible, if we see a divergence and price breaking through blue line, well, then it will be a counter trend move. Yeah, but you see, you need to have divergence. You need to have a low, you need to have a lower low here, lower low. Okay, so this was everything, guys. If you have anything, if you see that anything is not clear, if you have any questions, just feel free to email me, or you can write down below the video that will be uploaded tomorrow. You can write down a question and I will gladly answer you. Thank you for your time. I wish you a great trading week. We already had a great trading week, and still we have 2 more days to trade for this week, so I hope that we will have good entries. As I always say, stay safe and trade safe. Cheers, everyone. Talk to you soon.